Welcome back, friends. If you look at the world around you, you will find that most of the Asian markets currently in the green. The Dow futures also sharply higher, almost 195 points. And at one point they were up more than 300 points. So naturally, the stopgap funding that has been funding bill that has been signed over the weekend, and President Biden has signed it now finally, so it makes it into a law, has helped because now there is no need to worry about a US shutdown in the very immediate short term. However, there is a fear that lawmakers are headed into another shutdown fight very soon once again. 45 days is not a long period of time, and Saturday's agreement has done nothing about many brewing disagreements on the overall government spending, on the border issues, and also on Ukraine. They are just continuing to kick the can down the road and probably push it into the election year. And in the election year, there will be more noises from both the sides, the Republicans and the Democrats. So this is only going to aggravate the pain rather than elevate the misery. So you may see as the Indian markets also open, they are shut today on account of Gandhi Jayanti, but as they open, they may be fine to begin with. And as most of the world markets are also doing well as of now, but as you move further and time goes on, you may find that things start wearing off, and there will be new data points and new issues that may start emerging on the horizon, which can impact the world financial markets. World Cup 23 is about to start in India, and on Thursday, October 5, and it is expected to boost the economy's consumption by at least 13,500 crores. That's not a small sum of money, friends. So other than the entertainment that will be available to the cricket fans, you also see I look at it from more the economic consumption. Being an economist, so I look that as the more important figure. You guys are obviously looking for the Indian victory, which I also look, but for me the first thing is economy's consumption rising by 13,500 crores. Naturally that the GDP will go up. If the GDP goes up, then their earnings of the companies are also going up. Earnings of the companies goes up, then naturally the stock valuations goes up, and therefore there will be a positive impact on the stock market purely from a domestic perspective. Economy is booming otherwise. Look at real estate. Mumbai, the largest and the most coveted real estate market, has seen registration of over 10,602 properties during August of 2023. It is up 23% from a year ago. That's a lot, especially in an era of rising interest rates, mortgage rates, but the revenues collected through stamp duty charges has risen 53% on a year to contribute over 1,124 crores to the exchequer. So the Mumbai real estate markets continues to do well, and indications are all good for India. India's IGBs, or the Indian government bonds as they are called, are now going to be part of the global emerging markets bond index beginning June 2024. So JP Morgan's GBI-EM Global Diversified Index is an index in which India's bonds, or IGBs, the Indian government bonds, are going to begin trading from June 2024. As of now, the foreign portfolio investors have just 1.7% of the total IGBs, or the Indian government bonds, whereas the market size is $1.2 trillion. Now, the foreign portfolio investment into IGBs could translate to at least $20 to $25 billion by March 2025. There are other bond indices like Bloomberg and FTSE. If in them also the Indian government bonds start getting to be a part of the index, then you'll see much more money coming into the Indian bonds. And once that begins to come in such a large measure, then you will find that the Indian rupee can strengthen to that extent. And naturally, that will be a plus point for foreign portfolio investors in stocks. Stock markets will stand to benefit therefore. So eventually, I have to keep coming back to the impact on a stock market. So my friends, this is also going to be something positive for India. On the negative side, you find that India's elderly population, India has been roaring, and it will continue to roar. Next few decades are India's time. So the demographic advantage that India has got is immense. However, India's elderly population is going to double, and it may overtake the number of children by 2050. That's the latest data that is beginning to come. So we are in 23, 27 years down the road. And the effects, of course, will start coming into play something like 7 to 10 years before. So we are concerned about this, that eventually the demographic advantage that India is enjoying currently, and on account of which in fact, lot of the consumption that we are going to witness during the World Cup 2023 is going to be because of the consumption of the young aged group, which is going to come and watch the matches. There's also already a flurry for the India-Pakistan match in Ahmedabad. I hope that continues to be on the list. And there are so many others, right? As the World Cup progresses, there's a match scramble. So you see the youngsters coming out and they'll watch more and more. But this demographic advantage can start turning as the elderly population overtakes. So at some point of time, the lawmakers have to start looking into this angle as well. But that's a little further away. India's age has come. India's time has come. It's positive for India as a whole. Now, what remains to be a worrying point is the global factors are still rather negative. Oil is, although there's a tremendous effort that is being made by Modi Saab and his team on solar and wind energy and all that, yet you find there's a great amount of disadvantage in terms of India being a net importer of oil. Crude oil prices are still shooting up at over $94 a barrel for the Brent. Crude is something which stands as a disadvantage to India. And if you keep importing at such high prices, then there is a pressure on the exchequer, and that is why the rupee has been dwindling. But one thing that I feel can be helpful is firstly this inclusion in the emerging market bond index can be very helpful for India. And secondly, also there is a new tax that is coming out of withholding tax, TCS of 20% of remittances overseas under the liberalized remittance scheme. Okay, so all these can be a little bit of a problem, because people may hesitate a little more in buying dollars, so there could be a little less pressure in terms of buying dollars. We will address this at a greater length later on. Friends, this week could start on a sound note as far as the Nifty is concerned, but it could hit into troubled waters soon thereafter. Be very cautious in trading. Don't look at only the Asian markets today, the US futures, and come to a conclusion. Please do your own homework, but do understand that sooner or later there are other global factors which will come into play, and they will impact the Indian markets, the Nifty and the Bank Nifty. To get to know more, please do join our Premium or Premium Plus Telegram channels. Number to get in touch 982-086-1044. Alternatively, we are just a day or two away from the end of the Ganesh Chaturthi package, maybe closing it shortly, so you can join that moderately priced package. It's about to close in a day or two. Okay, we'll be finally deciding. I have proposed tomorrow, but I'm being told that maybe today itself will close. Okay, happy investing, take care, and have a great day ahead and a great investing week ahead. Take care, bye bye.